Morning or good afternoon, all depending upon where you are in the world. I just wanted to do a quick video looking at Tom Elliot, market commentator's latest investment outlook, which I try to do every time he does one, which is bi-monthly. Okay, so what's he looking at this week? He is going to very quickly touch on market sentiment. He's going to look a little bit at volatility. He's going to look at what's underpinning the market. He's going to break that down into two areas. He's going to look at sterling, and he's also just going to look at the latest Brexit development, the internal markets bill. We'll try to summarise this for you as quickly as we can, hopefully within a minute. I know a lot of people don't have too much time to read about markets at the moment, and everything's so volatile. It's all a bit crazy, isn't it? We're working from home, working in the office, etc. So we'll try and do it within 1 minute. Okay, so point number one, market sentiment. Although there's been a lot of volatility, Tom's saying that we're still pretty positive at the moment. He's saying the loose fiscal and monetary policy that we're seeing from governments worldwide will continue to be supportive for risk assets. Key risk, there's always a key risk. He views it as basically a change of stance from governments and a withdrawal of the stimulus that they've been happy to pump in until now, prior to a vaccine becoming widely available. Number two, volatility. There has been a lot of volatility in the market over the last 2 weeks, and Tom's sort of making the point that it's very sector specific. The big sell-off has been within the tech sector, and actually cyclical buyer stocks, etc., Japan, German stocks perhaps, and more utility-based markets haven't really seen too much of a pullback. The big news story, of course, was Tesla, which had about a 25% pullback in a very short space of time, and then other tech stocks sort of followed on. So it has been quite limited to tech. We've seen that represented by the Nasdaq over in the US, notwithstanding the fact that obviously year to date that market has performed fantastically well. Point number three, what is underpinning the markets? He's going to break this down into two areas. A, negative real interest rates, and B, corporate earnings. So A, negative real interest rates, that's a bit of an easy one really. You know, interest rates of every central bank globally almost has reduced their interest rate, and if we see inflation start to pick up, then the return that we're going to get on our cash, if inflation is above the interest rate we're getting, is obviously we're losing money, right? So there's no incentive for investors to keep cash at the bank or in things like long-dated bonds as their coupons don't keep pace with inflation. That again is very supportive for risk assets. Point two, he's looking at, or B rather, corporate earnings, which he says actually are now beginning to recover as sentiment and confidence comes back to the market. Number four, we looked at sterling. What a roller coaster for sterling over the last couple of months, right? I mean, June to a few weeks ago, it went up about 8%. Last week on the announcement of the internal markets bill, it's fallen 4%. Bouncing around all over the place. You know my stance if you've watched me before. Try not to predict currency. It moves everywhere. Stay diversified and just sort of ensure you've got a good diversification across multiple currencies depending upon your situation. Last point, number five, he's looking at the internal markets bill over there in the UK. Brexit now back in the headlines after everything has been flooded with COVID for obvious reasons over the last 6 months. So the government produced their internal markets bill last week, caused sterling to slump, and Tom's view looks like they're going to have a U-turn on the policy because it basically just, he says, defies the December withdrawal agreement, which was ratified, agreed with the EU and then supported by law. So he doesn't really see any other outcome other than a U-turn by the British government on that stance. Let's see. Overall, very, very volatile couple of weeks. Hopefully that's a very good summary for you that you can relate to rather than having to read all the headlines. That said, the full article is listed below. Please do like it, share it, subscribe if you get any value from it, and stay safe. I'll see you soon.